I'm attorney Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a lawcast series discussing sections 16 and 13 of the Securities Exchange Act related to insider reporting requirements and also related to the short swing trading rules. Today I'm continuing to discuss the section 16 requirements. Under section 16, every person who is an insider, including officers, directors, and 10% or greater shareholders, must file an initial statement on Form 3 and file amendments and continuing change statements on Form 4 within 2 business days of such change. Transactions required to be reported on Form 4 include acquisitions and dispositions of securities, purchase and sales of securities, exercises and conversions of options, warrants, or other derivative securities, and grants or awards of securities from the company. The following are some specific time and filing requirements related to Section 16. All Section 16 filings must be made using the EDGAR system. A Form 3 must be filed by the effective date of a registration statement in an IPO, or within 10 days of a person becoming an insider after the effectiveness of an IPO, i.e. if the company is already public. The initial Form 3 must include all of the insiders' holding of the reporting company's securities. An insider must file a Form 3 even if they do not have any beneficial ownership of the company's securities. So, for example, if you're a newly elected director or newly appointed officer, you must file a Form 3 even if you have 0 holdings and securities of the company. Any change in the insider's beneficial ownership of the securities must be reported on a Form 4 within 2 business days. The Form 4 must be filed for transactions even if that transaction would be exempt from the short swing profit rule that I'm going to talk about in the next lawcast. There are a few exceptions to the filing of a Form 4, including gifts and inheritances. However, if the person relies on the exemption from filing the Form 4, they must file an end-of-year Form 5 to pick up those exemptions. I always recommend just filing the Form 4 and not doing the end-of-year Form 5. Insiders are not required to report a Form 4 that only affects a mere change in the form of ownership. So, for example, if you own securities in your own name and you transfer it into your IRA's name and you're still the sole beneficial owner, you don't have to file a Form 4. There's really been no change in ownership, only in title. When a person ceases being an insider, officer, director, or 10% shareholder, they must file an exit Form 4. The Form 4 contains an exit box to report this change. However, even if you have exited and you have a transaction that can be matched with another transaction related to the short swing profit rule that I'm going to talk about in the next lawcast, you would still need to file a Form 4 for that matching transaction, even if you're now no longer an insider. A company must put all Forms 3, 4, and 5 on their website. All reporting companies, including, they have to file also their Form 10Q and 10K, but they also must file their Forms 3, 4, and 4 on their website and keep those reports on their website for 12 months. In the next lawcast in this series, I will discuss the Section 16 short swing profit prohibition and short sale or hedging transaction prohibitions for insiders. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.